Tom, how are you doing today and how are the Haribos?
Yes, they're nice, thanks, mate. How are you?
I am good, thanks. Look at the weather. Feels like Dubai.
Yeah, it's good. I've been lucky since I've been here. To be fair, um, yeah, but looking forward to going home soon. To be honest with you, but yeah, the weather's as good as it could be.
Okay, no, perfect. When are you headed back?
Mm, like 10 days.
10 days. Okay,
Yeah, ten
okay.
days.
What do you make from what you're hearing from the people back in Dubai? What are you hearing about what things are like on the ground?
I've so schools went back this Monday, I believe. So I think that's a good sign that there's like in school learning rather than the like virtual learning, e-learning, whatever you want to call it. So that's a good sign. I think it's still pretty. I think it's somewhat still spark out there, but um, I and that's going to be the case. I think people would have left in March, April, and just said, "I'm going to go and take the summer off," because that's what people do there. Um, but I think people will just start coming back, and it'll just pick up and pick up, pick up until you get to like September time, and then it'll be everyone will be back basically.
Yeah, that makes sense. From an escalation point of view, although the war hasn't ended, it does seem like things have kind of tapered back a little bit. It
Yeah,
seems like it's very much economic focused, but less dangerous for the civilians. Would you say that's correct?
yeah, I would say so. I think the worst case scenarios, i.e., nukes, bombing desalination plants, all that kind of stuff, is like now off the table. I don't think either side wants to go back to, and this is sort of what it said in the report today. I don't think either side wants to go back to like, you know, major hostilities or major levels of fighting. I think striking each other in the strait or striking, Iranian ships or US ships in the strait is fine. And I think that's what they're both doing now. I don't think you're going to see this massive fight. I mean, it's possible that we could see it, by this weekend. The Iranians still not agree anything, but and then you go back to fighting. But I think it's most likely that we're going to see um, the Iranians try to the choke the Americans from the Strait of Hormuz, i.e., don't let oil out. The prices of oil go higher. That puts pressure on Trump. Trump has to peel back. But the US and Trump will see it as we will continue this US blockade. No, nothing into Iran, nothing out of Iran. They can't export their oil. They get no revenues, and then they get cut off economically that way. And also then, you know, food supplies, etc., going into Iran. They stop that. All of a sudden, then that builds pressure on the Iranians to then come to the table. And I think you're at this sort of like stalemate point now between both sides, and it's whoever can sort of win the war of attrition now from the US blockade or the Iranians closing of the strait. They're basically the same thing. Um, so yeah, I think that's where it is, and I think a deal then eventually just gets done. I don't think it's going to be too much more hostile than what it's been this last week, really.
Yeah, I agree with you. I can see some escalation in the talks, the rhetoric, especially from Trump,
Yeah.
of course, if he doesn't get his way. But I think as far as this fight now, it is the attrition, it's economic, it's who can hold up longer. I think it's interesting because I think, from my understanding, Iran is a very resource-rich country, and so is the States. This doesn't really affect the States or Iran, but the surrounding countries, it absolutely takes a toll on them. I guess Russia is obviously, has a good relationship with Iran, but I believe Russia is also very resource rich. But it seems a lot of the American allies, the Gulf, Asia, they are not very resource rich. So who's the pressure on more? Is more pressure on the US to, stop the blockade, or is there more pressure on, hey, Iran, you will need some more resources? What's your take?
Um, so the Chinese are tied more to the Iranians than the US. They will be putting they're the main benefactors of oil coming out of Iran. So they're now one of the bigger losers because the Iranian oil is not coming out of Iran. So I think the pressure on Iran will come from the Chinese side to i.e. to do a deal, open the strait because they'll be hurting economically because they're not getting the oil they need. The Americans are actually all right. I think they're probably in the better position because they have, you have WTI oil in America, which is West Texas Intermediate. The Americans produce their own oil. So they'll feel the global inflationary impact of these higher oil prices, but in the US they'll be relatively all right. The biggest loser is probably the Europeans because Europeans need the natural
Mm.
gas, they need the oil, and they're just not getting it. So there's going to be, fuel shortages, jet fuel shortages, etc. Probably soon, like in the coming week or two, in the coming weeks, in the UK and in Europe. So they're the biggest loser. But do the Iranians really care about them? Probably not. They want the oil revenue, and they're not getting that. That's what they care about. They don't care about the Europeans. Does Trump really care about the Europeans? Don't know. Probably not. He might say he should do, but he doesn't. So I don't think. I think the US blockade is the winner rather than the Iranians closing the strait. In terms of the Iranians closing the strait impacts the US out of other countries probably the
Mm.
least. Where I think it impacts China a lot more, Europeans a lot more, but the US blockade directly impacts the Iranians. So I think that's how I'm sort of seeing it. And I think, yeah, it's hard to really say, but either way, I think this progresses towards a deal being done between both sides meeting up, and it's about. I think now it's whoever gains that bit of negotiating leverage, where the other side then comes down and makes the deal on the other side's terms.
Yeah, no, I think it's very interesting. For a long time, everyone has said, look, Iran is just a proxy of a China. So it'll be very interesting to see, okay, now that it actually is starting to negatively affect China, how stuck in do they get? If you're China, of course, this was a big win in a sense. America looks stupid in this scenario. But if it really is going to start taking a negative toll on your economy because of the oil, you do want to put an end to it. So you kind of have an interesting battle of the longer it goes on. This looks really bad for America publicly, but you're also kind of robbing Peter to pay Paul in the sense of it's not good oil-wise for you. So I'm curious to see just how influential China can be in these talks. Will they push them to reach a deal? Because at the same time, opening the strait now is a win. That's what we all have said, like the strait needs to open. That's
Yeah.
what America really wants. But you are kind of 5 steps behind if you're the States because the strait was open a couple of months ago. Whereas you're not going to get this uranium, in my opinion. Yeah, it's going to be very interesting. Let's see just how much pressure China chooses to put on Iran. But I do agree with you. I don't think it escalates, just to touch on that point any further militarily. But if it does, then I do believe the bigger loser in that case, it comes down to the Gulf, doesn't it? And American allies. So let's hope that doesn't happen. But Tom, to move conversations in a slightly different direction, but staying on geopolitics. So I spoke to a guy, an Iranian guy, and he can be a bit conspiratorial sometimes, but he's very clever and he gets geopolitics very, very well. And he told me last Wednesday that, look, this is a 100-year game where, America, they scooped up Venezuela. They already have good control when it comes over to Canada and the Americas as a whole. They don't really give a crap about Europe, as you said, and NATO. There's been a million comments about leaving NATO. And yes, they rely on the Gulf, and the petrodollar is, it's very, very important. But if you're zooming out 5, 10, 15 years, America can produce enough oil and maybe they take some serious pain for the next 5, 6 years. But eventually, America can be the distributors of the oil to Asia, to Europe, etc. And they don't really need the Gulf may lose out because of the oil. But I saw a record, like I think it was around 5 million barrels of oil sent from the States, exported from the States last week. I'm not sure what the numbers are at now. But can you see that case? Everyone calls Trump a madman. But if you're thinking in 100-year terms, and this is like, yeah, maybe 4 or 5 years of pain, but eventually we're the main guys for exporting oil. We're not relying on the Middle East as a bit of a proxy, the Gulf. We're doing it ourselves. Do you think that's feasible?
I don't know really. I think so. I think the US can take. They're a producer. They take care of themselves, so that they don't. If they want to become a big exporter, they need to get more oil from elsewhere, which is perhaps why they've gone into Venezuela, taken that infrastructure, if you like. But again, that oil is it's I think their oil, Venezuela oil is like thick oil, so I think that it has to go through like several refineries first. But so it's there's not the infrastructure in Venezuela to actually get a ton of the oil out of the ground imminently. So that might be like the long game for them. But in terms of using, I'm not sure. I don't really think they need to become this major oil exporter. Like they already have their own oil. Um, Maybe they don't want China to get a stronghold, i.e., through Iran, through Russia. But again, those guys both export a lot, and that's perhaps why they have military ties with Saudis and the other countries in the Gulf that are big oil exporters to sort of maintain a bit of power in that area. But maybe I don't know. To be honest, I don't know. I don't think it's that relevant in terms of like, are they really pushing to become this major oil exporter when they already have a lot of the oil themselves? They've taken a lot of the oil now, or they're going to be in control of a lot of the oil coming out of Venezuela, so that they might use that as a revenue source. But I don't know. I don't really see it. I don't think it's that important for markets today, really.
Yeah, interesting. I guess I'm trying to look at it, like we said, from like a big picture perspective because we focus on the macro. I'm trying to see even more zoomed out because the way I look at it is ultimately, the longer this blockade slash, closing of the strait is there, although markets don't seem to be pricing things rationally, the longer the strait is closed and the blockade is there, the more expensive oil gets, well, it should be, the bigger the backlog in a sense, the worse the supply shock. And if you are the States, you are not worried about your own infrastructure realistically. You mentioned WTI and we speak about Brent crude. Maybe you can expand on that in a second. I'm not sure what WTI is saying, but you don't need to worry about your own oil, whereas, it does affect Iran, China, etc. And yeah, if you can over time be a provider, I can see that as a win. So I wouldn't be surprised if you really zoom out. It's a longer term game ultimately, and you might say, well, they have allies in the Middle East like the Gulf and Saudi, etc. But we've just seen how it's something as small as a couple of drones and a couple of people hiding in a mountain with a rocket launcher, and the strait gets closed.
Yeah.
So I don't know. I think I looked a couple of weeks ago and said I cannot understand why Trump would do this. And I said, I think the biggest loser is America in this. And I don't see how this benefits them. But I think it only makes sense for this to be a benefit if they have a much longer time horizon on the table right now. So yeah, let's see. If they're really
It,
thinking
it
long term,
it
changes
might
things.
just generally be the case that like the Iranians were very close to getting these nukes, and I know that's happened with the Iraq story. I get all that, but I was never a believer of that, and then I saw Jamie Dimon come out and say like the war was actually somewhat no, like this did need to be done, even though it's bad for markets, etc. This did need to be done because that regime funds a lot of the terror in the world, and they were very close to getting nuclear weapons. And then as soon as I heard him say that, I thought, oh bloody hell, maybe this, maybe they were actually really close, and Trump did have to go in and do this. And Trump's in a lose lose, to be honest. Whether you like him or dislike him, he is in a lose lose because if he goes in and he doesn't win straight away, and it's all which is impossible to do in a country like Iran, he looks bad. If he doesn't do anything, and they do actually go and get nukes, and then start, say they were to use one, like Trump would look absolutely diabolical for having not done anything. So I do think it's sort of a lose lose for him as well.
Yeah, absolutely. It's a tricky situation. It's in every country's own interest to get a nuke. Let's be honest. I think we've seen this. No one messes with North Korea. I think if Iran did prove like, oh, we have a nuke today, I think people would calm down quite a lot. I think a lot of people believe, even though it's an unsaid thing, Israel have a nuclear weapon. So people are kind of careful there. People are careful with Pakistan and India. So it's in every country's self-interest to get a nuke, and it's in every other country's self-interest to not let anyone else get a nuke. So this
Yeah.
will always be a topic of conversation. But I don't see how, if you're Iran, it makes any sense to give up your enriched uranium, especially now, because you have two kind of playing cards here. You have the strait and you have that threat of potentially creating a nuke. And they can come and say, no, we're not going to enrich further. But the way Trump's come out, he's saying, no, you need to give it up
So
and you
yeah.
need to open the strait. But it makes no sense for you to give up your two cards, or you are a sitting duck. You are absolutely a sitting duck. So I kind of think, like you said, it's going to be a war of attrition for a long time. I think my concern is, as this continues to play out, I don't know how this affects the macro picture, which you obviously focus on. When you're looking at, ultimately, it comes down to the job market, inflation, how this affects interest rates. We want inflation to be under control. We want rate cuts. But I can't see how that happens if this blockade is there. And look at the price. We're talking about oil is being a bit irrational. What about fertilizer, right? What about jet fuel? What about gas? What about the price of food, etc.? So
Yeah, so all of that stuff is going up, and the longer this, like, even if they open the strait tomorrow, to get these like production capacities, back up to where they were, and get oil back out to the rest of the world, it's going to take several weeks to months. So I think, and I was, again, like, we're not experts on oil, even though that is what we're sort of half chatting about here. But obviously, this is the driver of markets at the moment. But there's a few experts that I do read, and they've said something along the lines of, essentially, um, all the barrels that were on the sea, that had been exported and were on the sea, have now reached the destinations, and there's now no new barrels coming into those destinations because the strait has been closed. So you're now going to start to see these like real world shortages come into play. So that's just bad for civilians of countries, for a starter. But in terms of like markets, you're going to get these higher oil prices are going to keep inflation high, and it sort of is as simple as that. So the Fed is not going to be able to do anything. So Scott Bessent come out the other day and said, "Oh, a new Fed chair might not need to cut right away. It might not be appropriate to cut right away." So he's almost giving Walsh the, assuming he gets approved, blah blah blah. He's sort of giving Walsh the green light to say, and to be honest with you, even if, I think he's saving Walsh the embarrassment, because if Walsh came out straight away
yeah,
and said, "Oh, we need to cut rates," and then all the other Fed members were like, "No," which they would say, um, yeah, I sort of got saying that, but yeah, you're saving him the embarrassment of, like, being, going in to cut the rates and no one else voting with him, and him being the lame duck of wanting to cut rates. That would just be ridiculous, especially if Powell is still on the board, but it's just in the governor seat rather than obviously being the chairman of the board. Then you would look at that and say, okay, who is actually in charge here? It would be Powell rather than Walsh, even though Walsh would be the chairman. But anyway, we're sort of getting into it. On the inflation side of it, it's going to stay elevated for a while. The Fed can't cut into that. At the moment, where markets were tightening before in terms of dollar up, yields up, that was when the markets were starting to price in, okay, the next move might be a hike, which was a crap opinion. We said this at the time. It's a crap opinion. It won't be a hike because they will see this. The higher oil prices are due to supply. So you can't hike rates into a supply shortage. It just makes zero sense. But the next move will be a cut. So that keeps markets still not buoyant, but somewhat supported, even though the cut might be towards the end of this year. And we've been saying this for a while, betting on Polymarket for one cut this year. It's a personal bet. I think we was in at like 22, 23, 24 cents. I think it's now like 29 cents. So, and even if it does come down, you get higher inflation prints, and it does come down, you might then go and get a 23, 24, 25 cents again that you can buy for later in the year. I think that's like just generally a good bet. But anyway, I think we go and get that cut later this year, and that will probably help risk assets even further. You just might get some real choppiness in the middle of this year and in Q3 with these the Fed can't do anything, higher oil prices, and the Fed can't do anything. So you have this higher inflation that seeps into the sort of real world economies, and you might then see a real negative impact on growth that the Fed then can't really cut into, and they might have to keep the rate higher for longer to sort of help quell the inflation side of it, and then they can cut into it later more aggressively. I think them staying high for longer whilst oil is elevated and growth is weakening is what brings markets down. And on the other side of that is when they think they've got inflation turning over and coming down again, they can start cutting and cutting aggressively because they'll know they're behind the ball at that point, but they've had to stay behind the ball to keep the rate
Yeah,
high to bring inflation down. But then that's what your bull market is. So that's sort of like my going thesis is
yeah,
for middle of the year, higher oil prices, Fed higher for longer, even though growth is weakening. The Fed know they're behind the ball, but inflation then starts coming down towards late Q3, Q4, and then they can start cutting more aggressively to get in front of that economic weakness or try to catch up with that economic weakness, and that's when markets catch up.
yeah, that makes sense. So ultimately, we would like the Fed to cut. It's good for us. I saw Kevin Walsh say he will not be Trump's puppet. I think he has to come out and kind of say that because Trump is
Of
almost
course,
publicly saying, when you come in, you will cut rates. And
yeah,
he's kind of forewarning, like, hey, I'm not that guy. Don't do that to me. It's not going to happen. So I understand why they can't cut rates. We already went over inflation. You cannot do that. You can't cut into rising inflation. Is the main reason you say they won't hike rates because it actually wouldn't solve anything. If the
yeah,
economy was just moving intensely and people were charging higher prices, people have more money to spend, then logically you can, hike rates and businesses have to slow down and you can slow the economy intentionally. Is the reason they can't hike because it won't solve anything because it's an actual oil shortage? Is that correct?
yeah, yeah. That's correct. If it
Okay.
was the case that they'd stimulate, like COVID is a good example, they stimulated too much, it then seeped into inflation expectations that prices were going up each year because there's too much money in the system, in the markets, in the economy. So naturally, businesses then up their prices. Workers would then the quit rate for workers in 2021 was very high because everyone had the confidence the economy is really good. I can quit my job, I'll go over there, get a 10% pay rise, and then in a year's time jump across, jump across. That's like an inflationary environment. And at that point, the Fed has to raise rates to squash the demand to bring prices back down again. That's when you have like an actual problem and you need to like hike. That's when you have an actual inflation problem and need to hike rates to squash that. This is different. This is an oil shortage because you have like a war, a geopolitical crisis. They will all unravel and come back online once this is resolved. But you can't hike into something that there's like a very natural supply shortage of. Like, it
Yeah.
just doesn't make any sense whatsoever to do. If anything, you would need to like look through that and say, okay, this is the definite. They won't use the word transitory. They'll never use that again. But they should look through that and say this is actually transitory. We're gonna, even though inflation is a bit high, we're gonna cut rates very slowly over the next 2 years. They shouldn't then start cutting rates, but give the forward guidance that that is their view, and that will help. That will essentially help markets move forward, and you're not going to get this like significant tightening then.
Yeah, makes sense. I'm honestly very excited. I think there's a lot of opportunity here. I'm enjoying the conversation. I have another topic I want to move it on to, but before I do we have any important, interesting economic data coming out over the next 7 days, whether that's job market or inflation? Do we have anything
The
on the
main
horizon?
the main one is the Fed meeting next week, but it's almost a bit of a boring one to some degree because, well, I think feel like it's a boring one for me because I feel like will know what they'll say, but they're going to keep the rate unchanged. They're not going to do anything there. I think they're going to sit there and keep their cards very close to their chest. It's Powell's last meeting or second to last meeting. I got my
Okay.
dates wrong, but or it should be. Um, so I think they're going to keep rates unchanged. The guidance is going to be, look, we're unsure. There's a war going on. We're going to have to see how that plays out and what the follow through effect is. We think we should stay higher for longer to weather this inflationary impact from the higher oil prices that we're seeing. But the view for the next move is to cut rather than hike. And he even said that when in his last meeting, he even said that no, they're not viewing a hike as the likely next move. It's just stay on pause, higher for longer to weather this inflation impact that's going to come in the coming months. With the next viewpoint being that the next move is going to be a cut. It's just going to be further out. I think you can say basically the exact same thing.
Yeah, I agree with you, and I think that's the most realistic scenario. I do think that there's a decent possibility that there are some dissents or some hawkish commentary about potentially a hike, not necessarily from Powell. He's a sharp guy, but I think there could be some other people in the committee who say certain words or certain sentences, and I do believe that any chance the market gets to read it, as, oh my goodness, they might actually do a hike. I think we could see some movement around that because the market seems to be acting on headlines more than anything right now. Reality is out the window. And something I was going to say, we'll move on to this topic now, is I know a lot of people who are very down or sad or disappointed. Bags are down, market's not bull mode, we're not getting rate cuts. And I understand, but I am actually very much enjoying this market. You often say this is a trader's market, and I think there is. The market is moving like crazy. There's a lot of volatility, but with this volatility, there's opportunity. And I think that's what we've been able to spot. You mentioned a poly market bet. And you mentioned
Yeah.
basically your odds going from 20 something cents over 70. You don't get some of these opportunities in a Super Bowl market, right? There's no volatility. It's kind of up only mode. And if anything, you're kind of stuck on a bit of a rocket ship where you're like, okay, we're going up, but I don't have much money. I can't buy anything more. I'm stuck. Whereas we have the opportunity here. If someone just uses a bit of initiative and some first principles, I think there's a lot of money to be made with the trading game and even on the poly market stuff. You're a testament to that. Successful poly market plays, and two, three times in a row now, you've managed to not call the top and call the bottom in a sense, but really time these relief rallies. How are you doing this?
Um, don't know really. I think I think I think it's the feeling of when things are overshot, either sentiment wise, overshot one way against price, or price against sentiment. Um, the poly market bet, that was quite a good bet. Again, you couldn't get like ridiculous size on it or anything like this, but I think there was a couple of bets, but the first one was the interest rate bet for one cut this year, and then for two cuts this year. I don't know if we'll get the two cuts, but we'll get the one cut this year probably. What you will get, I think, is an increase in the number of, so even though I think we'll only get one cut this year, I think you can buy the two cuts at a low price and then sell it, towards mid-year, for the anticipation of you're going to get a higher percentage, rate. It might jump from 15 cents to 20 cents, something like this. But anyway, that's a bit of a boring one. The other one was at the beginning of this month when Bitcoin was like 71K, 72K. There was a lot of bad news still coming out, and price wasn't going lower, and sentiment was really poor. So then you say, okay, well, Bitcoin's held at the range highs, which was 71, 72 at the time, before we'd like broken out of that range, 71, 72K. Sentiment was diabolical. A lot of bad headlines were coming out, and price wasn't really going lower. And then you had a change in the mechanics a little bit, which was a real heavy amount of or big bias towards shorting. There was negative funding rates. There was a big uptick in the put to call ratio. That's a lot of traders that are like paying significant premiums to buy downside protection. The ETFs had sort of been like net inflows, net outflows, like nothing mental, but
Hmm.
it's a bit boring. And then the outflows started to like taper off a little bit. Then the net outflow days were slightly less, and the size in outflows was also slightly less, and it was starting to skew slightly more towards more inflow days. And when the inflow days were happening, they were larger by dollar size, volume size. So you're starting to see this like slight dynamic change. So at that time, I think I bought at 21 or 22 cents Bitcoin to hit 80K in April, and I think that's now trading at like 75 cents or 70 cents, something like this. But I think, say you put 1,000 in, the payout was then 4,500, 5,000. It's now valued at 35,000, or sorry, 3,500. So 1,000 to 4.5, but it's now valued somewhere just below the top, so like 3,500. So that's one play. And anyway, it was based on that. It was that the mechanics were starting to look a bit more positive, so the underlying flows behind Bitcoin were starting to look a little bit more positive. We had a lot of bearish headlines come out and price didn't go lower, and we were consolidating at the range highs. And even though sentiment was diabolical, like fear and greed index, like bottoming at the lows, etc. So that's one way where you can look at all that stuff and say, okay, I appreciate that we're not in like some raging bull market, but you might go and get a counter trend rally here. And then it's like, okay, we go to like 75, 78. Look at the on-chain cost basis models. They're showing you a lot of resistances between 78 and 82. So that would be short-term hold cost basis, ETF cost basis, true market mean. 128-day moving average. I think that's about it for now. But anyway, you get this like bracket of resistances up there, which you then say, okay, that might be a target point. How strong are we to get to that level? If we break out 71, do we hit 74, 75? What then drives us from 74, 75 to the 78, 82 mark? Well, it might be shorts being liquidated if mechanics stays. When you get those initial breakouts, people have now finally changed their view of like, oh, shit, we're not in a bull market anymore, we're in a bear market. I need to short these rips. But then that first big rip usually takes those shorters out. So those rallies can be more aggressive than you think. If you look back at prior bear markets, the bear market relief rallies are really violent. You can go in like 30, 40, 50% upsides. Like, I think even now Bitcoin's done a 30% move higher from the lows. So, and say we get to like an 80, 82, which I think is possible, you're probably looking at like 35%. So, it's pretty significant. What's strange to me is something like Solana hasn't had a ripping rally, because in 2022 it went from 80 to like, I think it was like 80 to like 140, which is like a 70% rally. It's like a really significant rally. So I'm surprised we haven't seen some of these other alts have more significant rallies like that. But mostly that's it in terms of the how to identify these like turning points, if you like, these key inflection points and these turning points, and then recognizing, okay, we've had a breakout of 71. The key cost on-chain cost base is at 81, 82. So how much of that bulk can we go and get off that move? 75, 76 should be pretty easy. You get to 70, 80, much more difficult. Getting above 82 is very hard. So at least now we've taken the meat of the move, I'd say now. And now you want to be a little bit more cautious of how much higher you can actually go.
Yeah, makes sense. Makes sense. I do want to touch on the on-chain and some of the levels we're looking at. It's very interesting. But just for people who might not be too aware of Polymarket and the way it works is pretty much you're buying a share from yes or no, and it's basically ranks on a scale of
Yeah.
1 cent to $1. And that just means the possibility of it coming true is either nothing or yes. The main difference between like sports betting and some of these things is you're actually trading it like an asset. So it doesn't matter whether the outcome happens or not. It's just, can you exit your position with a higher probability than you got in? So when Tom got in, 22 cents a share, that you're going to get the price. But the more likely it became is at 70 or 80 cents. Tom doesn't have to wait for it to happen or not. It might not happen. The closer it gets to the execution date, it
End
will
of the month.
probably
Yeah.
swing in the opposite direction if it doesn't look likely. But if it resolves, Tom gets his full dollar for every 22 cents he put in, or he can close the position now. So did you close the position, or are you waiting for
I might
the
close it
resolution?
today.
Okay, cool. That makes sense. So yeah, that's just some insight. We actually did a full poly market prediction market breakdown on YouTube, so people can check that out. But Tom, on chain. So you mentioned some cost basis levels, some of the things you were talking about, true mean, true market mean. You mentioned, like short-term holders, etc. It was in your market update as well today. Specifically, in your market update, you talked briefly about ETFs too. But today in the market update, you spoke about true market mean being 78,100. You talked about the short-term holder cost basis, 79,400. The 128-day moving average at 77,200, and the ETF cost basis at 82.2. So you spoke about these key levels. Could you briefly explain why this is important and how we then deduced the key level we're looking at for this relief rally to perhaps move into is the 78 to 82K mark?
The best way to describe it is let's just use one for example. Short-term holder cost basis is at 79K, whatever it is there. That's the average price that short-term holders have paid for their coins. Prices come below that average price, those short-term holders are now in a loss. Every day they spend with that trade, play, whatever, in a loss, they're sitting there thinking, oh God, once it goes back to my average, my cost basis, I'm going to get out, I'm done with this, blah, blah, blah. So what happens is if that spends a long time below the cost basis level, which it has done, when price then moves back up and retests that level as like the break-even level, for those traders, market participants, whatever, a lot of the time they sell at that break even because they've gone through enough pain. They don't want to tolerate anymore. So they're sitting there saying, they're not sitting there thinking, okay, I'm going to get into 10% profit and then take it. They're just done. They've had enough, they're done. So historically, when we look at bear markets, traders will sell into those cost basis levels if they've sat there for enough time in a loss and gone, oh, bloody hell, this market's hard, I'm in a loss. And then once they get back to break even, it's like, thanks very much, I'll take it, I'm done with this. So I think you have a lot of those cost basis levels between 78 and 82. And I showed in the report today what 2022 looked like when we retested those levels, price rejected several times over the course of 6 months. This is where if you go and read our report, you'll see it. That's like the plug for it.
Absolutely.
But yeah, so that's essentially the example is it just acts as a strong resistance on first major retests of it, which is we did have one, I believe. I need to check this now, but we did have one in the 95s before. Yes, we did. 97, we did. So, and I thought that was the case. When I can't remember what bloody dates it was now, but like January, February, when it was range bound in the 80Ks, and then it broke above 91, 92, and it went to 97. That was then a retest of it, projecting to there, and then a hard sell down. Now, it doesn't mean we're going to move into 80K and then a hard sell back into 60K straight away. I don't think that will happen. I think we've had the price pain, and now we're getting the time pain element of the bear market. I think it will almost be like a slow bleed down throughout the summer, getting us into, say, August time, September time. And I think you want to be buying as you move down. Maybe we don't get into the 50s ever. I'd be surprised if we don't. If we don't get into the 50s ever, we should be able to see that, and then you can start buying up in the 60s. But this just looks typical of a bear market relief rally that tests those key cost basis levels, and it will be the second major retest. 97, now say like 80, if we get there, roll over again and keep forming that bottom. A bottom area might be between 60 and 65. You might get deviations above it, deviations below it. So that's why we say deviations below it, anything below 60K we'll take. And if it goes back down to 63K, we'll probably start chipping away a little bit, and that's our range, 50 to 63. The realized price is at 54K. All prior bear markets have spent multiple months below the realized price. I think the market structure is now a bit more professional, a bit more mature, that we don't have to spend months below the realized price. But if you do get a test of the realized price, it's a buy. And anything even within 10% of it, so let's say 54 to 60K, you should probably be having.
That makes complete sense. Great plugs as well for last couple of pieces of content and macro video, the on-chain video coming out. So I guess almost conclusive comments on that. Makes sense. We think we're headed between 78 and 82. Can't time that perfectly. I will ask you your invalidate. I was about to ask you your invalidation, but I just think the picture is so clear. So I don't know how relevant asking you like what the likelihood of us blasting. But if there was an invalidation, could we blast to 85, 86? What would we need to see?
That can 100% happen. But I think if we blast 84 to 86K, say, and it's driven by shorts piling in and then being liquidated, a quick move up and then a move back down to 82, 83, then that level was then lost, then setup is all fine. If you get moving to 85, 86, especially if it's driven by strong spot volume, and you get a retest of 83, say, that might be an invalidation because you say, okay, the short-term cost basis level has been reclaimed, the ETF cost basis level has been reclaimed, blah, 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 have all been reclaimed. Then you can sit there and say, okay, maybe we're wrong, maybe we're on for a bull market resolution, or resumption rather. I mean, I'd be very surprised, like financial market liquidity doesn't look positive at the moment. Where is I think when you look at crypto, I think we're struggling from a narrative point of view at the moment, like a storyline narrative point of view at the moment. You're going to get long-term allocators allocating to the space, but what's exciting about the space at this moment in time that is going to see us do anything more than a really strong relief rally? It's hard to then say what really drives the market beyond just a relief rally. I'm not sure I quite see that, but charting wise, I'd say the invalidation is a big move above those key on-chain resistance levels between 78 and 82. it'd have to be moved to say 85, 86, retest to 83, hold that level, and then move up again. And then you'd probably have to buy into that move up again, and that would be like your invalidation. But I'm not of that view.
Yeah.
I think we can. I think it's possible we get that shorts being liquidated, move into 84, 85. I wouldn't bet on it personally. But again, I think we reject and roll over.
Yeah, no, I think it's interesting. And also, look, it doesn't necessarily invalidate your long-term thesis of 50 to 60K. A couple of compounding factors can come in and maybe you break that 82K mark, right? You're at 84, 85, but I don't necessarily believe that means, oh, guys, we're back at 125. I think there's nothing stopping it from breaking the key level again and dropping down and happening again. And, next thing you're at the 50 to 60K mark. What I would say is I want people to look at this like a positive because you're not getting such clear relief rally signals as you are seeing right now. Like, I'm not a trader, but just from reading the work and having a brain, it does seem quite clear. Like, wow, these relief rallies are not easy to read, but quite simple. They seem to be acting the way they should be.
Yeah, they're hated rallies. So that's why you keep seeing that again. Funding is negative again now. So you do have a decent bit of spot volume. Coinbase premium is positive, which is driving price higher. Shorts come in. When you get a little pop, shorts come in. Then 2 or 3 days later, they get squeezed and liquidated. And you keep seeing this rinse and repeat. And if we see that up to 79, 80, 81, and it keeps happening, then it can keep going higher. And it will get to the point where you get to like 83, 84, where people go, oh, I'm done with this. Maybe I've got this wrong. The bull market's back on. And that's when it will roll over. And that will be the short, when all the funding has been reset. It's positive again. People have capitulated on the, oh, this isn't a bear market relief rally anymore. This is an actual rally. I need to be back in. That will be the rolling over point. And that's the point you short. That's
No,
my view at least.
absolutely. There's a lot of money to be made here. Ultimately, the underlying mechanics and macro forces suggest that we are going to go lower at some point. And how low we go, we don't know, but the mechanics suggest that 50 to 60 mark. And I think every push up should be capitalized on. I am not a trader, but this is a getting in and getting out game. I'm not saying do leverage and put, a short in, but if you're an average guy who's just holding a bag, of course you want it to go up. Of course you want to see 120, 130, 140, and you want all your other bags to move up also. But when things are moving on a rocket ship and they're not coming back down for a little while, you simply cannot be accumulating properly. These are huge accumulation opportunities. So I would say if someone's sitting on capital right now, great, look to enter lower. And if you are fully exposed, especially with something like Bitcoin that is performing quite well and these relief rallies, strongly consider de-risking and entering lower, right? Because it is very likely to move lower. And if you want to accumulate more Bitcoin, you have to outperform Bitcoin. And sometimes that means catching an alt, and other times it means exiting and re-entering at the right time. So there's a lot there, and I think we should be doing that. So yeah, Tom, that seems great. We've covered on-chain, we've covered macro, you've shared your invalidation, we've commented our longer-term thesis continues to hold, that we go lower, but we've clarified that it's actually a good thing and a lot of opportunity here. People shouldn't crawl up in a ball and cry about bear market. This is where opportunities are, right? Building the bear doesn't just talk about builders, it's build a portfolio in the bear. For some of the alts, it's tricky because they're not moving as much. So you mentioned Sol. I'm not sure if that's because of and ETH. I'm not sure if that's because of the issues we're having in DeFi right now. I don't think so. I think you're just not getting ETF flows and stuff into the likes of a Sol. It could be down to narrative. Abro, if you're listening, jump in. It could be narrative led. It could be a game of people do want to see some more risk on before they even feel comfortable playing in the likes of the Sol and the ETH. I do believe I spoke to Abro earlier today, and he said Bitcoin dominance is increasing. And I guess you have alts moving away, capital moving away from alts into Bitcoin, and depending on the pendulum, maybe back into stable soon, and then back in the other direction. But yeah, I think capitalize on Bitcoin mainly. And if you're in some alts, I don't know, what kind of key levels would you look at for ETH or Solana before you say, you know what, maybe play the rotation here and look to get in lower?
I'd be looking much lower, to be honest. I would be looking for like, I don't know. I could be proven wrong. I sort of don't even want to put the view out there, but I think Sol below 50. I like ETH. I don't know. ETH could go back to like 1200. It could honestly go. It's one of the most overvalued like assets, not just in crypto, but like in the world. Um, I don't know. I think when I look back at prior bear markets, it's these real long bottoming out processes, and I think that started in early February of this year. Like that's when we had the big capitulation down. When Bitcoin was 97K in mid-January, we then capitulated down over the following 3 weeks. ETH went from 3,400 into 17, 1,800. I think that was the like last price capitulation. I now think we're in the time capitulation. And so far, if it started early February, it's now late April. So you had February, March, some of April, and it started. So you've had like 10 weeks, 2.5 months. I think you have to ask yourself, like, is that what a bear market looks like for crypto? If you don't think we're in a bear market, you have to say to yourself, are we in a mid-cycle pullback like what we had in 2025? And I don't think we're in that. It's hard to really say, but you look at it and you say from like a time capitulation point of view, is 10 weeks, 2.5 months enough? Probably not. Previously, they've been like 12 months longer. So
Yeah.
I think we've got a lot of time still ahead of us. If you look at all prior bear markets, you had plenty of time to be buying the bottoming range. So I wouldn't rush or worry that you've missed out or anything like this, because well, our view, my view, etc. is I think there's still time and still opportunity ahead.
Yeah, for sure. Once again, I see this a bit as a big opportunity for people too. I do think, as you've said, Bitcoin has performed very well off the rallies, whereas maybe the else not so much. I see lower for sure, but you're going to get these rallies on both of these assets too, right? And if something ultimately is seen as undervalued, whether that be Sol, and you mentioned ETH being overvalued, but depending on what the market thinks, if something's under or overvalued, when they see an opportunity for a rotation, they will take it. So, when people are taking profits from, let's say, being long on Bitcoin for now, they have choices. They can move it into stables or they can move it into something else that they feel is undervalued. But I think just being able to play that rotation game is key. I know he's just joined us. I'm going to address him in a second, but last year, or earlier in the year, Bro absolutely smashed it when looking at like a hype sell rotation a couple of
Twice,
times
twice,
actually.
yeah. The
Twice.
first was like from BTC to ETH, and from ETH to like Sol and Hype. I remember
Yeah,
that.
like phenomenal rotation. So I would say that's something I want everyone to be super mindful of in the community. Anyone watching who's not a member, the main thing we talk about with the inner circle people is rotation. This is where the opportunity is. I'll repeat it again. If it was up only mode, all you would feel is FOMO, and you'd basically just be ready to become someone's exit liquidity if you're not willing to pull chips off the table. So now is a huge opportunity. But Mr. Abroh, head of research. Hey, how's it going? How are you doing today?
Hi everyone, good to see you all.
Fantastic, fantastic. Well, guys, we're all here. Obviously, we spent the first half talking about macro, talking about on-chain, talking about some technicals. Tom is still eating his Haribos. And now I want to touch on crypto as a whole and specifically go into maybe a bit more detail on what's going on with the hacks and DeFi in particular. But bro, before we do that, do you have any comments on the macro, on the on-chain, anything from a technical point of view? I know you're a good trader in of yourself. And same thing with what Tom said about ETH being extremely overvalued. This is interesting for me when you have an asset worth $5,000 and then it's worth $2,000 and it's proven itself multiple times to get to like $4,500, $5,000 and someone tells me it's overvalued. I see it macro, but I also don't feel too
Okay,
bad about holding my ETH. So yeah, any comments on the macro and the on-chain
so
technicals, and then
Tom
a
is
repeat
saying
to Tom's
ETH
comment.
is relatively overvalued, right? Relatively to like other assets.
I'll let him address that.
Yeah, mostly, but it's just overvalued in general. I think as well.
Why do you think it's overvalued though? Like simply because like it's performing better than the other assets?
No, like long term, it's still overvalued. I think in
Oh,
terms of
okay.
like what the fees it generates,
Yeah,
everything.
yeah, 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 yeah. Infrastructure layers are all overvalued in that sense. Yeah, yeah, yeah. Yes, I'm somewhat on the same page. I think, like in terms of but there are people who argue that you shouldn't value these platforms the same way you would value businesses, and you should value them as more like cities. Like more like a real estate and stuff like that. Um, but I think in general, these L1 assets, unless they figure out how to capture value better, um, they will keep being overvalued over time. And this monetary premium will start compressing unless they, for example, Ethereum is moving away from L2 centric roadmap to like L1 centric roadmap. That should actually be better for the value capture of ETH, to be honest.
Yeah,
Yeah.
yeah. I agree with you. I think for me, actually, when we're looking at something like Ethereum, I definitely wouldn't value it like you would value a regular company of profit and loss and stuff and fees captured. We already said at any point they could adjust their model, and next thing you know, fees are 5 or 10x. That's the first thing. I think when you're valuing a company and you try and look at earnings, you're not it's not easy to value like the moat they have in that sector or industry. It's not easy to value the developer base or the user base or their market positioning or just the upside, the total addressable market. We talk about the stablecoin bills being passed. We talk about a lot of these DeFi hacks. If we're looking at which I know it's a protocol level, but if we're looking at the most secure blockchain, I think Ethereum is right there at the top. You're also talking about narrative and story and where we are in the cycle and people's belief like, hey, it's down 50, 60%. There's upside there, whether you believe it true or not. This is a speculation game. This is not Warren Buffett's value investing. 99% of the companies that you look to buy, they're flipping losing money or they're being propped up by some nonsense. So the whole value investing game, I don't subscribe to it. I look at more what project or company is truly revolutionary, that's game changing, that has a moat, that's not going to be easily overtook. And when I'm looking at something like Ethereum and Solana and Hype in particular, um, it's like, okay, these guys are giants and they're not going anywhere. And there's something as stupid as crypto starts trending and people open up their Coinbase and think a Bitcoin is too expensive, can't buy a Bitcoin, so choose to buy something a little bit cheaper. What if ETH hits Bitcoin's price one day and they buy an ETH? I think when you're dealing with this type of market and people like that, anything can happen. But I wouldn't value it the same way you'd value a normal company. I just don't think you can. Because what happens if Ethereum disappeared overnight? I actually think that would send a lot of ripples across crypto. It's not the same if you lose, Camino or Uniswap or, Hyperliquid's killer. So I'm not going to knock them. But if you delete a lot of these projects, delete Pump Fund, no one cares. Everyone is, and you can launch a meme token on about 50 different platforms now, right? It's just not, it's not real infrastructure. It's not real utility when you can just be replaced that easily. But I don't think you can just replace Ethereum or Solana. But yeah, those are some quick comments. But
Yeah,
yeah,
one
not
thing
sure
I
if I
would
persuaded
add
you guys.
is that if someone asked me what asset I would buy for the next like 10 years and like just buy and forget, it wouldn't be Bitcoin, it wouldn't be Sol, or it wouldn't be Hype, to be honest. Despite me like being, bullish on Hype and other stuff, I think it would be ETH, like in terms of like safety and how do I say, reliability. I think it will be here like in 10 years. Will it be outperforming in the next 10 years? I'm not sure, but I'm fairly confident it will be around in like 5-10 years for sure. Like, Solana might not be around. It might become like Avalanche or like what we had, like Phantom Chain. Do you guys remember Phantom? Like, it used to be a thing.
Yeah,
Yeah.
never quite at the level of Sol, though. I do believe Sol has cemented itself as well. And I do think Hyperliquid has cemented itself as it's like it's not
Nah,
going anywhere.
like Hyperliquid.
Really?
No, 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 no. Hyperliquid, like it has a very fragile, not fragile. Again, it has a point of failures. Okay, so it can
It does, it does.
disappear like overnight if it happens, like Terra Luna or like
What about Solana though? Do you think Solana can disappear overnight? It's
this
so
is slowly
resilient.
disappearing though. Like, um, what do they have? They have a very strong meme economy. But ultimately, even at the height of the like dominance, I think it was like 9% at some point, like Solana dominance. Still 9% is nothing compared to like 60% of Ethereum. You know what I mean? It's like a much more, I would be much more comfortable holding ETH for the next like 10 years rather than Solana. Even though
Yeah,
Solana
same.
might be outperforming Ethereum and might be around. So that's what I mean. Like, so
Yeah, I agree with you, and
Fold is
I
yet to prove the kind of, that they are on the same level as Ethereum in a sense, like in terms of resilience and ecosystem resilience.
yeah.
Yeah.
Oh, you cannot compare the two from a product perspective, in my opinion. Now, of course, Ethereum's way bigger. I think more upside in Solana, of course, because it's much smaller, right? There's more growth potential because of how tiny it is. But I was around with the FTX and the Luna and that crash. I saw Solana go down from nearly like $260 to $5. I've spoken to a lot of people who are developers on Solana and the people who go to these breakpoint events, and maybe resilience as far as security, etc., they don't have, or maybe loyalty of users, etc., maybe not. But it really did show from a developer point
Yeah,
of
yeah,
view
I
and a
agree.
user point of view, there's a cult. Same way you see XRP, which is absolute nonsense, but it's got the market and you've got the community, the XRP army. Solana has some loyal people and some good marketing too.
Yeah. I don't know. I was about to tell you guys this story. Like last week, I met a guy, TradFi guy, randomly, and he's been asking me about the market, and I've been asking him. And he is such a big XRP bull, and I was like asking, okay, what's the reasoning behind it? And he says like something like a hatch. Hatch, is that a word in English? Like a feeling, like a uh,
Hunch.
hunch. Yeah. He goes like, I have a hunch. I go like, have you looked at the market cap? For you to go like $1,000, it needs to like be like $20 trillion in market cap. Do you really see that? And it just made me realize how inefficient the market is. And I go like, okay, these are people we trade against. So there is still like, I think,
Huge.
yeah, huge. Like if we play it well, we can still make like a lot of money because people still buy into this stuff.
Absolutely. And guys, this is what I'm saying. Like I said, I've seen a lot of negativity because the market's down, but the same people being negative are the ones who are watching every single day, who are switched on in the market. And you guys have such an advantage compared to some of these like TradFi guys. They don't stand a chance. I would just say be active. Don't just sit there holding your bag and be sad because nothing's going on. Play the game. Play the games. A lot of opportunity there. There are incredible airdrop opportunities. I know we're going to touch on DeFi. It's a bit shaky. There are some great DeFi opportunities. There's some huge swing trade opportunities, and you don't need to play leverage. And if you're right, if there's what's XRP's market cap right now? 20 bill?
200, I think.
200 bill? Okay, yeah, Mr.
Let me
Zero.
100 something, 180, or it's close to 200, but let me check
My
the
goodness.
exact number.
Well, let's just round ball it. It's over $100 billion. In my opinion, that's
No, no,
$100
no, no,
billion.
no. It's 88 billion. Oh, really?
Okay.
Okay.
We'll round it up to $100 billion.
Yeah.
I hope this gets clipped because the XRP people are very passionate. There's $100 billion of misplaced capital. Right? That money needs to go elsewhere. It's crazy. But look, I live in Canary Wharf and there's XRP ads on the tube. So who knows? But yeah, put that aside. The Solana, that's Ethereum. Hype, look, what I meant by hype is the security risk is there, but it really is a sticky product. They're doing a great job. And I'm not going to say it's revolutionary, like you can trade anywhere, but they've done a great job of making themselves attractive to TradFi people, but also they're sticky enough where crypto guys like them too. With the point of failure, I think it comes down, like you said, to the security. But I'm sure you guys have heard the term first scaler. So people obviously talk about first mover advantage, and this is who builds first. But the real winners are the people who can scale first. And you had MySpace, Friendster, and Facebook. What made Facebook pop was it scaled first and fast. Kind of have that with Ethereum too. So to scale, you need capital and you need a strong feedback loop. And the issue with most products in DeFi, no one uses them. So they can't actually get good. But because people use Hyperliquid, they can very quickly and easily refine and improve their product way faster than any other perp decks. So that's why I think they'll do really well, because they can scale very, very fast. And with Solana, I'm not sure from a user point of view, I'm not sure, especially right now, like I know capital is nowhere near Ethereum, but I'm not sure how many unique people use Solana, especially when things are exciting. But I have personally felt that the UI UX a lot of the time and the experience using Solana and some of its ecosystem is friendlier than using stuff on Ethereum and certainly other chains, because they have so many people. So I think that first scalar idea is very powerful. Speaking of that, put that to one side. This is more Abro centric, and Tom, I definitely want you to pile in and ask lots of questions. Abro, DeFi is a shit show. Huge drift hack, 285 million North Koreans, from what I hear. We saw, I think, Aave, something went terribly wrong there. DeFi is a shit show. Me and Tom like hypothesized maybe that's why Solana is underperforming too. But look, scary. I'm not gonna lie. We do a lot of DeFi stuff. I personally moved some capital out of some DeFi protocols into some cold wallets. And we believe in DeFi. We believe in the infrastructure. We talk about Wall Street on chain. But it is quite alarming. Like, what is happening here? Is this just bear market woes where these things need to happen, 3AC, Luna, FTX, etc.? Or is this, hey, shit, the average guy has access to incredible AI models and tools now, and you probably have some ridiculous models out there that some very technical people have that, unfortunately, it's just so much easier to find bugs and holes and breaks in the system. What is going on?
I would say it's not really, again, if you really looked at what happened in both of those hacks, I say it's like a human stupidity. First of all, the drift hack, people say, oh, AI is going to break, like days, AI is going to break that. But the drift hack was more like social engineering. Okay, rather than a code hack, it was more like a human hack. Okay, so it's not like AI broke, smart contract or anything like that. It's like it was human stupidity in that case. Okay, in the second case, layer zero, like I don't know, we've covered layer zero 3-4 years ago. I remember me talking about it, that they have you just need two actors to collude, because they have like one oracle and one real layer that can.
What, if you don't mind, bro, quickly, since wasn't there a huge investment from like Citadel or
Yeah,
BlackRock or one of these entities? Yeah, like very recently
yeah,
into
there
Zero Two,
was.
right?
Yeah, I think they might. Yeah, that's also one thing. Like I was like thinking maybe whether they will um like help them out, because they invested in layer zero and they want it to do well. But layer zero, instead of like taking the blame, they're actually pointing out to Kelp Tower, saying that, oh, you actually did wrong, because layer zero allows like multiple configuration, and they chose the one that allow like one relay and one oracle instead of choosing the ones that are more secure. But ultimately, this vulnerability, like, I remember we covered Thorchain and we covered why bridges are so unreliable, because they have like security assumptions where like if you compromise 2 or 3 or 4 wallets, like you can take over the bridge. So, and I also read like the hackers also kind of changed the RPC providers or something like that. Again, there was some social engineering involved, but there are like multiple stories. So I don't know. I'm a nerdy, but not that nerdy in a developer level. So I don't know which one is correct, because Aave published their version of what happened. Kelp DAO published what happened there, their version. Then Layer Zero published their version of what happened. And then there was DeFi Llama that they also published their own version. So there were like multiple versions telling like different things. So I think there was a social engineering involved in this case as well. So I'm not sure like being scared of AI and stuff like that is actually,
Okay.
yeah.
Yeah, that makes sense. It seems like there's a lot of human error more so than actually holes in the system. So
Yeah.
yeah, interesting. Are there any platforms that you think are most at risk that you would recommend people stay away from or move funds away? Anything stick out?
any L2s, for example, they all are governed by, but at the same time, you might argue like the reason why, like, I don't know whether you guys been following, but Arbitrum froze some of the money that hackers stole because they had this emergency power, because they are centralized. But at the same time, it's the point of failure as well. What allowed them to actually save people from being hacked is also potential vulnerability and the source that the hackers can use in the future to actually hack them. So any L2, like essentially they're centralized. They have like multi-sigs and single sequences. So they have like single points of failure. Any untested, unaudited apps like a new apps, I don't know, like I don't use. For example, Drift, I never used that as well because they had like this lockup thing. Better to only use the platforms that are that were battle tested over time. Again, Aave, many people say, oh, outflows and stuff like that, but you actually look what happened. There were like many like decent research reports that saying like, okay, this is just panic, and panic happens out of ignorance, because they don't really understand. So the damage was very well contained in case of Aave. Even like in the worst case scenario, I think the socialized loss would be probably like 1% for depositors. So which is quite good, you know what I mean? Like in my opinion, which is like crazy thing happened and your max drawdown is like 1%. I would still keep using only the battle tested platforms like Jupiterland, Camino, Aave. I would still be using Aave. I'm just waiting until they like unfreeze the markets. So yeah.
Yeah, amazing. Tom, do you have any comments on this? You're obviously a user of a lot of these platforms, but you're not a DeFi guy. So do you have any comments as an observer?
No. Yeah. So I've used them, but I'm not like I don't know. I'm just not a fan of staking on DeFi platforms for 4% a year when they have these
It's
hacks.
13% on Aave right now, by the way. It's like you're
Yeah.
outperforming S&P, but the reason why it's 13% is because many people panicked and withdrew their money.
So if I deposited today, I wouldn't average anywhere near 13%.
Yeah, but you won't be able to withdraw, I believe, for some time until that's why I'm not depositing at the moment, because
Yeah.
they need to resolve the hack and decide who will compensate for depositors or the socialize.
It's
Now, right now they're just pointing figures, but that's the reason why I'm not depositing at the moment. But 13% is decent in my opinion.
Yeah, I don't know. Yeah, 13% is much better. I think 4-5% is just not worth it, especially when you run the chance of these platforms being hacked. I think, just put your money in your brokerage account and like set up a brokerage account, get one of those, and you'll get 4-5% there safely rather than take the risk of like drawing down to, being hacked. So I don't know. I'm not a big fan of using DeFi. Even the pools, like when we look at like Solana pools and stuff like this, and you can go and get like 3% a month and stuff like that. That is obviously decent, but they cap your upside, and you still take you can still take the drawdowns on them. So I don't know. I don't feel that comfortable with. I'd rather it's difficult for me because I trade as well, so I'd rather just do the trading for myself. But I still think the rewards of using DeFi don't are not worth the risks, because you might go and get 5% a year from staking all fine in a bull market, but in the bear market you're open to these hacks. Well, these hacks, I don't know why they don't happen in bulls and they do happen in bears, but it just seems to me that in the bear markets it's not worth depositing your stables there. To me, I think leave them in a brokerage account. I think is better if you're desperate for 4 or 5%, or just be patient and wait for the trade opportunities to buy stuff when it's down significantly.
Yeah, I somewhat agree, somewhat disagree. I would say, yeah, but in general, for Tom, I think that works better. I'm still a big fan of like CLPs, to be honest, because I think there is no
Yeah.
better risk reward, whatever like Tom says. He says, oh, you cap your upside, but you kind of take the drawdown. It doesn't really work that way. Also,
Yeah.
I think my overarching take from all these hacks is that I think it will be useful for the industry in general, because I think the market is so free that it allows whatever should fail to fail like very fast. So it takes like, if you are wrong, you will be exposed. You know what I mean? Like, if you're stupid and if you can manage, if you have like weak points of failure, you'll get exposed like very fast. And maybe it's a good thing in like, in some sense, because, these kind of players will be flashed out and people won't be using them. And then, either they adapt and survive or they just die. And over time,
Yeah,
only the strongest.
absolutely. Absolutely. Look, it's survival of the fittest. If you want this sector to grow, these things need to happen to separate the wheat from the chaff. And I think a lot of these projects will fail, will die. And that's good because better products will emerge. So I think it's necessary for its growth. In regards to, CLPs and these types of things, I think, look, I think there's just as much room for error if you give the wrong person access to a trading account. I think 90% of traders fail. You're good at what you do, so it makes sense. And I think with CLP sometimes and some of these like lending markets, etc., it's first off, if you're busy, you can kind of park funds there, generate you something. I think if you're not generating anything on your portfolio and if you're not generating anything, especially if the market is moving down, we say like if you just leave your cash on side and do nothing, inflation's eating you. Well, if you've just got your capital there and you're not going to sell your soul, literal Solana, I'm saying, and you expect it to go down to some of these levels we're speaking about, well, you might as well, you either sell and just hold the cash and buy back lower, or if you have some cash anyway, like you can DCA back in to Sol at lower prices. And some people need it to cover, well, not need it to cover expenses, but if you need extra cash flow, being not a trader, you don't have that skill, then definitely do it. Like, I don't know, Tom, if you bought me two guys with very limited trading experience and you asked me to give them each who I'd give 10K to try and make money in crypto, I'm probably giving to the CLP guy over just the average guy with 10K in trading. But of course, if you've got a really good trader, that guy could probably dominate CLPs anyway if he wanted to.
I agree, by the way. If you're a good
Yeah.
trader, you would probably do very well in CLPs as well.
Yeah. But in your case, Tom, because you are so good at trading, it was you don't need to. It's a bit of a waste of your time. You might as well say F it and full port the trading. So yeah, no, it's very interesting. I think we do airdrops at Cryptonary, huge upside. We got the Hype airdrop, we got the G2 airdrop, we got the ARB airdrop, we got DYDX, we got Uni. We had all of these huge airdrops. I would say with airdrops, so important, you're very secure with these because these are brand new projects, right? These don't have a track record. You are flirting with fire when you're playing with these, but there is upside. So just make sure you're careful. We already have like best practices. But that's airdrop, CLP, same. Like you said, with lending markets, I wouldn't bother if it's 2-3%. Just keep your cash in a cold wallet if that's what you're going to do. I'm not sure about like liquid staking and stuff right now. Haven't looked into this as of late. But yeah, I think I wouldn't shy away from DeFi completely. I would just hedge. So if you are going to do CLPs, there's a few platforms, right? Use Project X and use Orca, right? Or use Orca and Meteora, right? Just hedge. Same thing if you really want to be involved in the lending market. Camino or Aave, like there's plenty. So hedge for sure. And if you are trading on chain, use a couple of different accounts, right? Make sure you've got your ledgers active, the works. But yeah, overall, that's DeFi, that's crypto. Anything you guys would like to cover before we hop off?
No, I think that's it. I'm not sure. Like, yeah, DeFi will be fine now, I believe. I think it will take some time to actually for it to like recover again. But at the same time, I'm personally in Camino still because the yields went up, and I go like, okay, everybody's watching this stuff so closely now because they have like time logs now and all this stuff. I think it should be fine. Hyperliquid again, I think is good. It also has like I believe many had like concerns about hyperliquid security. Let me share like what I think right now, like quickly. I think it's now safer to use Hyperliquid than it used to be before, because now we know Arbitrum can freeze funds, and Hyperliquid mostly deals with USDC, which is also freezable in case of a hack. And everybody is showing that it's okay to freeze like centralized assets. Because the problem would be if you needed to deposit Ethereum into Hyperliquid, because you can't freeze Ethereum because it's like a native blockchain asset, but USDC has this like centralized issue, and you bridge from Arbitrum to get into like Hyperliquid. So it's now kind of more safer, because you know that in case of a hack, because we know, right, that Hyperliquid has like 4 signers, that in case they get compromised, Arbitrum can go ahead and just freeze them. So, which is like kind of makes me like much more like calmer in terms of like Hyperliquid. So other than that, I think DeFi will be fine, and yeah.
Yeah, no, I agree. Final comment is I think we should launch a petition and get SBF out of jail, and we should let him launch a fund, and we should all put some capital in, because I don't think there's a better trader investor out there than
better
Mr.
than Warren Buffett. It's crazy what he has done.
Not even close, and he did it in a year or two. So yeah, thank you guys, appreciate it. Thanks for everyone for watching, and yeah, Rain, take us off.